Today we're going to be talking about candlestick patterns trading for beginners. Lovely traders, welcome back to ChrisFX. I hope you're doing great both in life and in trading. Before we begin with the video, I'm not a financial advisor, nor am I telling you what to do or what not to do. Whatever you do is purely your own responsibility and I take no responsibility for your actions. Without any further to say, let's begin with our video. So here traders, I have drawn a couple of examples for you as you can see on my screen. First of all, we are going to be starting with this area over here where I'm going to be explaining how candlesticks are being formed. So number one, how bullish and bearish candlesticks are being formed and how wicks are formed. Wicks are those things over here, as you can see. Now, first of all, traders, the most important thing, let's focus on this area. As I said over here, this candle over here is a bearish candle, the red candle, and this is the bullish candle. And how are those candles being formed? Let's begin with the red candle, the bearish candle. Let's begin with this candle. I'm gonna pick up this candle and I'm gonna be explaining how this candle was formed. For the moment, I will put a vertical line over here, so you shouldn't care about this whole area at all. So let's move on. This candle, as you see over here, down here, how was this formed? Bearish candles begin from the top and close to the bottom. So this candle over here started from this top over here and then closed at this bottom. Okay, the opposite holds for the bullish candles, and let's show the bullish example. And here we are. The bullish candle starts from the bottom, from here, and closes to the top. So once again, bearish candle starts from the top and then goes and closes to the bottom, and the bullish candle, the green candle, starts from the bottom and closes to the top. Now let's get this a step further, guys. So what are those wicks? How are those wicks formed? It's very simple. I will make it very simple for you. So how was this candle formed exactly the way it was formed? This is a red candle. So what did we say about those candles? The bearish candles, they start from the top and they close to the bottom. But first of all, how did this whole thing happen? This wick, as we call it over here. This candle started as a bullish candle and it went from this bottom to this top. So at some point in time, this wick over here was this candle. As you see, this bullish candle. So what happened? This candle started from down here and it pushed over here, and then the sellers started pushing the price downwards. They became powerful, and then this candle was pushed down, started turning into red, as you can see here, and at some point in time, this reached over here where the wick is. So this wick was formed because of the green thing. This is already formed over here, as you can see. And now this candle was here, and then the buyers pushed this candle a little bit up, and this is how this wick was formed. Okay, guys, so this is how this candle was formed. It started as a bullish candle, as we said, at some point in time. From here it went over here, and then the sellers pushed downwards. Now this has to turn into red. They pushed until here, and then the buyers again pushed here, and this candle has closed now. And we have those wicks, of course, above. I'm not gonna draw it again. Now, guys, each candle represents a specific time, let's say. So, for example, those candles in real time over here represent 4 hours. Why do they represent 4 hours? Because I am on the 4-hour chart. If I go to the 1-hour chart, if I type 1 and H, this candle now represents 1 hour. Each candle represents 1 hour, and so on. So if I go to the 15 minutes, each candle is 15 minutes. So let's say that this one was a 4-hour candle. This whole thing happened in 4 hours. Buyers pushed until here, then sellers pushed until here, and again buyers pushed until here. And this was a seller's dominant candle. This is a bearish candle. Let's move on with the bullish examples now. How is this candle formed? Or better, let's take this one and let's explain how this wick was formed over here. It's pretty simple, guys. This was a candle that started from here, from down here, because we said the bullish candle started from the bottom. It pushed until this wick, as you see, at some point in time, and then the sellers pushed the price back down until here. and this is how this wick was formed. Now, if this candle would have had another wick over here, how was this wick formed? Let's say that this is the 4-hour candle. This was a candle that started from here and pushed until here, and then the buyers started pushing the price up. So now we have already formed this wick. This wick was formed with this movement already, and now the same thing happened. It went until here and then back here, and then this is how we have the second wick. Okay, and one final thing that I want to show you: if we have a bearish candle after this candle, if we have a red candle after this candle, how would that start? Of course, it would start from here, okay, from the top of the other candle. So when this candle closed, always the next candle begins from this top. If the next candle would be after this candle, the next candle would start from this bottom, whichever candle it is, green or red. So let's say that we have this candle immediately after the bullish candle. So this candle started from this bottom over here, it went down here, up here, and then closed here. So the next candle has to start from the point where this candle closed, which is exactly this point. It started from here, and what happened with this candle? Initially the buyers pushed up and then the sellers down, and this is how we formed this wick, and then the sellers went until this point, and then the buyers pushed until this point. Okay, and we have this seller's dominant candle. Now let's move on to the right area over here and explain all of these formations separately. Now, one thing I don't want you to learn, I don't want you to learn all the specific names. I just want you to think about the formations of the candles and what they mean. So, for example, this is called a doji candle, and those are called spinning tops. And we do not care about how they are called, we care about understanding what they mean, and this is more than enough. You can pretty much Google anything you want, guys, so do not worry at all. This candle over here that you see, let's zoom in a little bit, this exact candle means indecision in the market. So what has happened with this candle? This candle indicates, guys, that nobody won the battle, let's call it. Sellers and buyers could not move the price. On our left example, let's say that this candle, this bullish candle started from here and closed here, and here we have a doji candle. The next candle, as we said, starts from the finish of the previous candle. So we have this one, let's fix the coordinates real quick. Okay, forming here. Now you would expect a push down or up or whatever. Those things happened, and this is how this vertical line was formed. Then this candle might have formed something like that. The buyers pushed, then the sellers pushed down. This should be red now, let's say. And then again the buyers pushed, and this thing closed right here. So this is how the body was formed. And of course, those movements left those wicks above and below the candle. This is a doji, this is an indecision candle. The same holds for those spinning tops. The doji is a candle with small wicks, generally speaking. Those wicks are smaller compared to the spinning tops, but they mean the same exact thing. Indecision. All these three candles show indecision in the market. The way to trade dojis and spinning tops, bullish or bearish, I don't care, is as signs of reversal in the market. So let's say we have a price moving up like that, okay, higher highs, higher lows, and then we see something like that up here, and then you see this formation, one of these being formed, or a couple of these in a row. This might indicate, once again, a reversal in the price. So if these candles happen in an area that was resistance in the past, let's say, then they might be indicative of a reversal in the trend. We might be seeing a small downtrend or even a big downtrend being initiated. And let's give a real life example. Here on the left, guys, you see this spinning, bullish spinning top, I think it's called. We don't care about the names that much. We care about the practicality. So here we had an area of clear resistance, right? And I want to have that in gray always. We have this area of resistance. I don't know if this was a daily. Yeah, it was also a daily resistance. So at this point in time, here the price moved downwards from here. And when the price came back into this area and gave us this spinning top, this indecision candle, what did we see, guys? We saw a huge reversal being initiated. Here is another example of a doji candle, guys, and it is followed by a spinning top. Also, we have this head and shoulders formation on the 4-hour chart once again. First of all, look at this one, this spinning top over here. And what do we see after this being formed? We see a reversal, but I will focus mostly on this candle. The reason for that is, as we said, we need to be trading those candles in areas of previous support or resistance. So here we have the area of the left shoulder, which was resistance, let's say. Okay, and then price pierced the level like a knife through butter, and then it came back over here in the previous resistance and gave us this doji candle, and then the spinning top. And what followed after that, guys? You see this movement to the downside, which was a movement of 197 pips. So once again, those might be indicative of reversals when they happen on major levels that have been tested as support or resistance or both in the past. These are indecision candles. Now I will immediately, from these over here, I will go down to these, the pin bars, the bullish pin bars and the bearish pin bars. When these candles over here, the bullish pin bars, are being formed after a downwards movement, so we have this movement over here to the downside, and let's say we reach this area of previous support, then if we see one of these candles, regardless of the color of the candle, then this might be indicative of a reversal in price. We might be seeing a reversal like that. The opposite holds for the other candles, the bearish pin bars. So if we have an uptrend, if price is coming up to an area of previous resistance, let's say, and we see one of these candles, the bearish pin bars now, then price might start a reversal from here. The reason for all that, guys, is that what those candles are indicative of in both situations, we don't care if the candle closed bullish or bearish, those are indicative, those wicks underneath are indicative of huge buying pressure to the upside. Okay, in this case, this candle started, of course, from here, as we said, from the bottom, because it is a bullish candle in the end, but it went down here, the sellers pushed down here, so at some point in time this candle was red, and then the buyers pushed up here, and this candle closed with this wick and green. And now let's see how this candle was formed. This candle started from the top and the sellers pushed to the bottom, but then the buyers pushed until here, and like that it closed red. Of course the sellers won, let's say, the battle in the end of the day, but look at how much the buyers pushed the price towards the upside, guys. And the exact opposite holds for these candles and how those wicks were formed over here. Okay, and let's see real life examples with the bearish and bullish pin bar candlestick formations. Okay guys, here we have a bearish pin bar example. This is an area of previous resistance, and price came here and left this candle over here, this bearish pin bar, and then you can see how price moved towards the downside. This was indicative of an initiation of a bearish movement. And let's find a bullish example now, guys. Here we have a bullish example, which happens to be a double bottom at the same time. As we can see, after this bearish movement, we have this bottom, then we have this movement, and then the price comes back here and leaves two bullish pin bars, those over here, and after that you can see what price did. This was the initiation of a huge bullish movement. We are almost there, guys, bear with me. Now that we got this out of the way and this out of the way, and we explained how candlesticks are being formed, let's start with these ones over here. And what those are the bearish engulfing candle, and this is the bullish engulfing candle. And why are they called like that? They're called like that because this candle engulfs the previous candle. So this candle has this previous candle inside it, okay, as we can see over here. Some people, in order to call it an engulfing candle, they also need the wick to be engulfed. So this candle should be, let's say, something like that. But for me, this is an engulfing candle. It doesn't matter if it also engulfs the wicks, as long as it engulfs the body of the candle, of the previous candle. And this is an example of a bullish engulfing candle, as you can see. And I'm referring to the green candle because this red candle started from here, closed here, this bullish candle started from the bottom and then pushed above and engulfed the previous candle. It is inside it, as you can see. Again, guys, those patterns are beautiful when they happen in previous areas of resistance, in this case, in the bearish engulfing candle, and on support, on the other case, for the bullish engulfing candle. And then they might be indicative once again of a change in the direction of the price movement. Let's go ahead and see some real life examples. Okay, we have our first example of a bullish engulfing candle over here, guys, and I will explain which one exactly. We have this movement to the downside, and then the price reaches over here. If I move back to the daily chart, this area had been tested as resistance over here and here, so probably price would react to this level. Price went down, okay, making lower highs and lower lows, and then it gives us this huge bullish engulfing candle that I have over here, guys. You can see it. This candle, this green candle, totally engulfs the previous candle. And look what we have after this bullish engulfing candle, guys. We have this huge movement to the upside. And let's take a look at the bearish engulfing candle example now. And we have an example over here on this area that we showed the spinning top beforehand. Exactly, we have a second confirmation. As you can see over here, we have this area that was tested as resistance previously, right here. And the price went down, came back up to this area, gave us the spinning top, but then immediately after the spinning top, we have a huge bearish engulfing candle. It totally engulfs the body of the previous candle and even more. And then, guys, look what started after that. This huge movement to the downside, where we saw the other bullish example here. And now that we got all of this out of our way, let's move to the final one, which is the morning star formation and the evening star formation. The morning star, it is better to trade it when we have a bearish movement. So after a bearish movement, we have this bearish movement, let's say, and we have this candle being formed, this red candle. After this candle, an indecision candle follows. You see this doji candle, and immediately after this candle, we have a bullish candle. And this whole formation is called a morning star formation. And when this happens after a downtrend and on an area of previous support, we can probably expect an initiation of the opposite movement. The opposite holds for this one, for the evening star. The evening star, when it happens after an uptrend, after a move to the upside, and on an area of previous, let's say, resistance where price has reacted in the past, we have to see a bullish candle followed by an indecision candle, so the exact opposite, and then followed by a bearish candle. And this might be indicative of the initiation of a bearish movement, guys. And let's go ahead and check real life examples. As we said, an indecision candle might be also a spinning top candle, okay? So I want you to understand how indecision candles are being formed. You don't need to remember any of the names, really. Do not expect the morning star to be immediately formed necessarily after this movement. So you see a morning star being formed here and then the uptrend. In the realistic world, you might also see something like that. This huge movement to the downside. Then we have this small like of consolidation. And then again this movement to the downside. And then we see this formation, guys. You remember? Let's zoom in. We have a bearish candle followed by an indecision candle, and then we have a bullish candle. And look what happened. And the price since then moved like 100, 200 pips, let's say. And we have another example right here that I saw. This one, the example that we showed the spinning top on and the bearish engulfing candle, it is also an example of an evening star. And why is it an example of an evening star, guys? Because we have this movement, we have higher highs and higher lows being made, we have an uptrend over here, and then we have these three candlestick formation. What do we have here? We have a bullish candle, an indecision candle, and a bearish candle. This happened in an area of previous resistance, as this happened on an area of previous resistance, which now became support, the morning star. And this evening star now happened in an area of previous resistance. And then we saw this whole movement to the downside. So these were the examples for today, guys. Hopefully I explained how candlesticks are being formed and hopefully I made it very clear for you. Then we explained about the Doji candle over here and the spinning tops, the bearish and the bullish, which are all indecision candles. We talked about the pinbars, the bullish pinbars, which are indicative of an initiation of an uptrend, and the bearish pinbars, which are an indication of possible initiation of a downtrend when they happen in an area of previous resistance. We talked about the bearish engulfing candle, indicative of a possible initiation of a downtrend, the bullish engulfing candle, which is indicative of the exact opposite, initiation of a bullish movement, the morning star, and the evening star, which were our last examples. One thing that I want you to remember is that these patterns have way more significance when they happen in previous areas of support and resistance. And this is how I would personally trade them only and only if those candlestick formations happen on previous significant areas of support and resistance. In case you want to ask anything, guys, go ahead and leave me a comment on the comment section. I will be responding to each and every one of you, of course. And in case you want to support the channel, go ahead and check out IC Markets with the link down in the description. They are a regulated and trustworthy broker offering up to 65 currency pairs and a leverage up to 500 to 1. They also process your withdrawals very quickly. Furthermore, if you feel like you have learned something, please leave me a like and subscribe to my channel because I will be providing more and more free educational content. Thank you all for watching. Until next time.